Good morning everyone and welcome back. This is the 7th video in the series of Let's Invest, and today I'm going to talk about how to write your own investment policy statement. Well, one of my friends mentioned to me that I should do a little recap before I begin the next video, because it is beneficial for those who have just bumped upon this video for the first time and not seen the previous ones. So Alok Shankar Pandey, this is for you, my friend. Well, we have already covered in the last 6 videos the investment basics, which tell you that you have to understand your risk profile. You have to know whether you're ready to invest before you enter into the markets, the golden rules of investing, which you must keep in mind before you start investing, the investment plan components, knowing your goals well, being able to identify your goals into mid-term, short-term and long-term goals, overviewing of various investment types, in which I told you about those securities which are suitable for short-term low-risk investments, things which are suitable, or investments which are suitable for mid-term investments with a moderate risk and a moderate return, and investments which yield high returns but for a very high risk. Then I also taught you how to identify your risk profile, and in the last video we saw how you can prepare your own asset mix based on your risk profile. Now, for preparing your investment policy statement, you have to keep all of these things in mind. So in case you're not clear about any of those things, you can go back and then come once you're a little more confident. Now let's see what an IPS is. An IPS is a statement which defines the general investment goals and objectives. It also discusses the strategies which will be used in handling the portfolio. It also includes your risk, it includes all your goals, it includes your asset mix, the kind of securities in which you're going to invest. In effect, it is an all-in-one statement about all your investments. It acts as a guideline for you to start investing, and also to revisit your investments every time that you want to make a change. Generally, when you go to an investment advisor or an asset manager, he will prepare an IPS for you, which may run to 15-20 pages also. But that is not what I'm here to teach you. I'm here to teach you what is the bare minimum basics that you need to put in your own investment policy statement, so that you don't get drowned in your own paperwork and you find it easy to maintain. Generally, the IPS has components such as the scope and purpose, which runs to a couple of pages. It talks about you, who's the client. It talks about the people who are going to handle your portfolio, what kind of relationship you're going to have. Then it is governance. Governance talks about who will be responsible for taking decisions on your behalf, who will be responsible for making investments on your behalf. Then there is a section on investment return and risk objectives. Now this is what I'm going to cover in detail in this video. And in the end, there is risk management, which tells how will the portfolio react in case there is a deviation in the portfolio. How will the risk be diversified in case the portfolio does not meet its requirement? Then how will the situation be handled? How frequently will your portfolio be rebalanced? Now all these things are what would be there in an IPS if it is made by a professional investment manager. However, again, I'll take you through a Word file which you can maintain for keeping your investments in focus. Now you can get an IPS format online easily, as Morningstar has a very good investment format which can be downloaded free of cost. You can make your own decision which format you want to use. Format is not important. What is important is that you have it all assembled in one place. In case you want my format, you can write an email to me and I will share it with you so that you can use it. Now you're not going to see my pretty face for some time, because we are going to move into the Word file, and you have to focus on the Word file and see how the IPS is going to be maintained. Well, this is what an IPS would look like. The first section will have your personal information, In the personal information section, you can really write as much information as you feel like. Your investment advisor may run this section to a few number of pages, but you can just limit it to your name, your bank account information, number of members in your family, your employer details, whatever you find convenient. Then in the next section, you have to list your assets and liabilities. Now this is important because this is very important for the planning process, because you have to know what you have and what you owe before you move on to investing your surplus funds. So here I have embedded an Excel sheet which will help you develop an overview of what you have like this over here. So what you need to do is you can just click anywhere here and make changes. So for example, this can be less, this could be more for you. So you can see that this particular pie chart below has changed. You will not be able to make changes in this area. You can only make changes in the white columns, or if you want to make changes in any of your assets or liabilities. In the end, you will see a net picture of your assets, which will show you how much you have invested in which category. Next, you have to write down your incomes and expenditures. Here again, I have left these cells open, so you can put in your salary, your spouse's salary, any other incomes that you're receiving. You can make changes to the income heads. You can make changes here, but you cannot make changes to the annual components. Again, you have to list down your household expenditure. So I have listed down what I think are the general heads, but you can make changes again over here, what you feel like. So for example, say your net take-home salary is more and it comes to this, and your spouse also gets a salary, say this much, and then of course your household expenses are more, say this much, and in the end, once you make these changes, you will get what is your net investable surplus. How much is the money which is left every month after meeting all of your expenses to get your annual investable surplus. Let's then move on to the next section, which identifies your portfolio goals. I have made this section so you can visualize where you would like to have your investments at what time. So you can use these sections to write what are your goals, what are your short-term goals. Anything less than 5 years I would consider as a short-term goal. I have given some examples like purchasing a car, going on a foreign holiday, any contingency expense. Here I would also want you to mention whether this goal is a need, a want, or a wish. For example, purchasing a car can be a need. Foreign holiday, however, would be a wish. Contingency expenses again is a need. Why I'm asking you to segregate your goals like this is because we have a limited investable surplus. When we have to make the decision of which goals we must meet and for which should be funded with this investable surplus, that is when our needs, wants and wishes will come into action. Our needs are definitely what need funding. Other wants and wishes come later. Same here, child's education is something that I would keep in the need. Child's marriage is something that I would keep in a wish or a want. I want to spend money for my child's wedding, but if I do not have the money, he better go ahead and do a court marriage or he funds it himself. And lastly, retirement. Retirement is very important, and I would say you mark it as a need in the long-term bracket. So use this format to write whatever are your needs, short-term, medium-term and long-term. In the next section, quickly determine your risk tolerance if you have not taken one of the surveys which I suggested you to take. So for example, I have listed 3 portfolios here. I would like to keep the 4 portfolios separate. One portfolio I would keep for meeting my short-term goals. Second portfolio I would keep for meeting my medium-term goals. And the third portfolio I would keep separate for my long-term goals. So please specify what are your requirements from each of these portfolios. What is your time horizons? What is your risk-taking capability on each of these portfolios? In this section, you should list down any constraints that you may have to your portfolio. You do not want to invest in something like hedge funds, derivative instruments, whether you do not want to invest in companies which are not socially responsible, and if you have any other tax considerations that you want to invest certain part of your portfolio in tax efficient products, then also you should list it here. In the last section, I have listed down portfolio objectives and their financial funding assessment. So all those goals that you had written here, you have to list them down here. And then the cost and the time frame. So I want to purchase a new car in 3 years. And the car that I want to purchase costs 4 lakhs today. So what is it going to cost after 3 years? I have taken a 8% rate of inflation for almost everything to keep things simple for you. And for short-term investments, I have kept a rate of return of 7%. For mid-term investments, I am assuming a rate of return of 10%. And for long-term investments, I am assuming a rate of return of 15%. So here these three are for my short-term portfolio. These are short-term goals. One I have to achieve in 3 years, the other I have to achieve in 4 years, and the last one I have to achieve in 1 year. And these are my costs as on today. This is what you have to list. Everything else will get calculated on its own. So for example, if you say that your contingency expenses that you're going to keep will be 2 lakhs, then you make the change here. And if you want to buy a more expensive car, then you make it a more expensive car. Okay, but again, see, wants and wishes is what comes here. Now you can see that my monthly SIP requirement is coming to 2 lakhs. However, my investment surplus per month was not 2 lakhs, it was less. So this is where I have to question myself. Is it a required need for me to buy a 40 lakhs car, or is it my wish? Of course it is my wish. So here I will make a change and I will convert it into a need. I will say my need is really to buy a 4 lakhs car, because that will also do the purpose of commuting from one place to another. I can take you ahead and show you the asset mix. So this is my investable surplus requirement, which is 6 lakh rupees, sorry, 64,000 rupees per month. And this is the money that I need to invest. Now, if you go down further, you will see that this is how you have to put your proposed asset allocation. Now, I have given here for my 3 portfolios, short-term portfolio, long-term portfolio, and medium-term portfolio. However, you can make changes as per your own requirement. Please refer to video number 4 and 5 to assess your risk and to redistribute your portfolio the way your risk profile suggests. And you have to further segregate in each one of your portfolios how much money you would like to invest per month where. So for my first portfolio, I am investing some money in my savings bank and the others I am putting in FDs. For my medium-term portfolio, I am putting SIPs for equities, for fixed income, and most of the money I am putting in mutual funds, and these will be equity mutual funds. And for my long-term goals, again, I am choosing equity mutual funds, small cap equities, mid cap equities, and large cap equities. You'll see that most of my money here is invested in fairly risky securities, and that is how you should also make your investment plan. Let's go back to our presentation now. I hope that you found this video informative and you will be able to prepare your own IPS basis these guidelines. Thank you very much. If you have any questions, please write to me at tanujayadav@yahoo.com or connect to me on my LinkedIn ID, which is Tanuja Yadav CFA. Thank you very much. Looking forward to seeing you in the next video, in which I'm going to teach you how to select equities. Thank you.